Hey everyone, glad you could join us again. I hope everyone is having a great day. People who own Bitcoin don't know what's coming, but guess what? It's in the numbers. It's the turn of every cycle, and this time, XRP is the only asset that's ready to take the throne. If you think this is all a bunch of talk, wait until you see the numbers that Wisdom Tree just released. We'll begin right now. They didn't skirt around it or hide it in an aside. They said it straight out. XRP only needs to go up 20 times from where it is now to beat Bitcoin. One of the world's largest institutional asset managers is bringing up a math problem that no one in the Bitcoin side wants to talk about. Why did they pick XRP over all the other assets to show this? There must be a lot of cryptos out there, right? Because this is the first time in the history of crypto that the infrastructure, the liquidity lines, and the regulatory path are all moving in XRP's favor, while Bitcoin stays the same. When you put the macro structure of 2025 to 2026 on top of XRP's previous cycle pattern, that 20x prediction stops looking crazy and starts looking very safe. The price of XRP is not going up. This is XRP doing what it was made to do. Pay close attention, because if you're watching this and don't have a full plan for the XRP cycle, you're not on the right track. It's been said over and over that XRP missed the bull run, but that view is still valid. XRP didn't miss anything. The last bull run ended with XRP. This is the point where people forget how this thing moves. If you go back to 2017, XRP was behind the whole time. Nobody cared about it. It was made fun of. Some said it was done. It didn't move while everything else did. Then, in the last few minutes, when most people had already given up, it went off. 30,000% run. It was one of the biggest moves in the history of the stock market. It was the last thing to move. That's how it works. Here's how the years 2024 through 2025 are set up. XRP didn't do anything from October of last year to January of this year. It went through 5x to 7x on the main markets. Mainstream sites saw increases of 3 to 4 times as soon as the law became clear and liquidity returned. That burst in November and January wasn't a coincidence. It wasn't noise. It was a typical XRP blow-off at the end of the cycle. What then took place? XRP dropped by 25 to 30%. Bitcoin dropped 20 to 25%. The value of all crypto assets dropped from $4 trillion to about $3 trillion. There was less liquidity. Optimism went away. There is no bull that loud. That is a sneak reset. This was the same purge step that made 2017's XRP run so big. This is the part that almost no one is looking at. Rate of XRP to Bitcoin. Since XRP's biggest run ever, this is the first real sign of a possible monthly breakout. And in the past, when that number changes, XRP doesn't just go up, it takes off. There is only one result that can be drawn from all the metrics, patterns, and macro setups. The bull run didn't happen in 2025. It was the start over. Longs lost $19 billion on October 10th alone. The markets were re-energized. A lot of leverage was taken away. Now XRP is ready to lead the next wave instead of following it. Let's focus on the present moment, because the next few weeks are going to be some of the busiest of the whole year. Several Fed leaders are talking. On the 19th, the FOMC meets. Big numbers about jobs go down on the 20th. When these times come around, global markets quickly change positions. At times like these, there is always a lot of volatility. But here's something that most people miss. When macro volatility happens, it always benefits assets that have real use, strong liquidity rails, and well-established institutional on-ramps. That's exactly where XRP is moving forward every week below the surface. One of the most important signs of this change is ETFs, and the plan for rollout is crazy. Canary City is already alive. Frankie T comes next, then 21 shares, Bytewise, Coin Shares, Black and White, Tree of Wisdom. This is happening very quickly. Frankie T will be out by Tuesday the 18th. Bitwise is getting ready for either the 19th or the 20th. After 2 days, 21 shares and Coin Shares all went off at the same time. After that, around Thanksgiving, Grayscale and Knowledge Tree are added at the end of the month. In 1 month, there were 7 spot ETFs. None of those things, predictions, hopes, or ideas. At the same time that these companies are exposing XRP, they are also managing trillions of dollars. It has never had an ETF rollout that happened at the same time as Bitcoin. ETH also didn't. This is real-time organized infrastructure for liquidity that is being built while the price is still low. And whenever infrastructure grew under a quiet price in XRP's past, what came next was never small. And just as planned, people in the Bitcoin world are starting to feel the heat. New emails have come to light that show a fund with ties to Epstein helped with early development of Bitcoin Core. Also, pay attention to how quickly some people try to change the subject. Tribalism, defensiveness, and other distractions rise when a story loses its way. This is always a sign that the tide is changing. On the charts, though, something much more interesting is going on while that noise grows. The 50-day moving average just fell below the 200-day moving average, which is called a death cross. It's seen as a sign of danger by many, but Bitcoin has dropped below this cross in the past and then gone up anywhere from 70% to almost 200% afterward. And that bounce is exactly the time in history when altcoins do better than Bitcoin. When Bitcoin goes up, then down, then back up again, that's when XRP usually speeds up. That's where XRP's biggest ratio breaks have happened. Now that institutions are fully involved, the setup is even stronger. On video, the Secretary of Commerce said that he buys Bitcoin every time the price goes down. That makes it clear where we are. It's not quiet right now. This is the positioning of cash at the sovereign level into digital assets. And that same money will finally move into XRP ETFs because they are fast, cheap, ready for regulation, and made to settle large amounts of money. The lanes are very wide, but you can get a better view if you zoom out. The story is told by how wealth is distributed around the world. You have $120 trillion in stocks, $140 trillion in bonds, $250 trillion in real estate, $100 trillion in M2, $30 trillion in gold, and much less than $2 trillion in Bitcoin. It's like a puddle in that ocean. XRP is a drop in that puddle. But here's the important part. Now, those trillions can go straight into the crypto environment for the first time ever in a way that is legal. These types of structures are made for assets that have usefulness, throughput, and clear regulations. Examples include ETFs, sovereign wealth channels, pension flows, and institutional allocation models. At that point, XRP is right there. Because of this, Bitwise's CEO said something that caught the whole market by surprise. He said that the idea of halving every 4 years is from a different time in crypto. The whole system changed because of the ETFs. There are new players, new drivers, and new patterns of funding. He said it's likely that we've been in a mini bear market for 6 months and are now getting out of it. He's right. When an asset has a spot ETF, the old multi-year bear markets get a lot smaller because capital starts coming in regularly. People always want to buy something new. And when different companies' ETFs bring in money from different types of investors, the floor goes up, dips are bought faster, and the cycles get tighter. This is where it all comes together because the whole XRP setup looks very different from what most people think once you know how the liquidity structure and macro time windows fit together. As we move forward, global capital will change the prices of risk in all asset classes at the same time. It is the assets with better regulatory framework, greater banking integration, and faster settlement rails that benefit the most when that happens. There has never been a time when institutions were so in sync with crypto, and XRP is one of the few assets that already fits into the system that institutions are moving toward. It's not about hype. It has to do with time, infrastructure, and how liquidity acts. The first signs will show up in liquidity cycles, so that's where you should start. In the past, when global markets get tight, risky investments sell off, and the flow of money slows down. That part is likely to happen, but what happens during the rebuild phase, when money starts to flow back into the system, is what's more important. It's not flowing everywhere at once. It goes to the things that have the most clear-cut uses and the most established channels. That's what makes a leader. This time, ETFs have made the routes for crypto the clearest they've ever been. Bitcoin and Ethereum were the first to benefit. But once XRP's ETFs are fully operational, those flows won't just be interested parties. They'll make a new base level of demand that has never been seen before. This is the change in structure that most people miss. In previous cycles, XRP rallies always needed support from regular people. Exchanges had broken up liquidity, institutions were left out, and banks were stuck until regulators made things clear. Even with all of that, XRP's biggest changes ever happened. The setting is very different now. 7 ETF providers are getting ready to go in the same month. Exchanges are making liquidity lanes wider to get ready for settlement flows. Pilots, partnerships, and quiet infrastructure upgrades are being used to connect banking lines. All of this is happening at a time when markets are moving away from overvalued tech and toward other assets that can be used as payment. everything is falling into place perfectly, but time isn't the only thing that matters. You need a technical framework. And the way XRP is structured technically right now is very similar to how it was before the rise, before its biggest runs in history. Long consolidation, less volatility, less traffic, and a narrowing range. These don't mean you're weak. These are signs that things are getting worse. When a lot of pressure builds up inside a band that lasts for years, the next move isn't a small breakout, is a change in the structure, and the ratio of XRP to Bitcoin is the first sign of that change. The key ignition point has always been that number going up. At this point, money moves out of Bitcoin's consolidation and into assets with more upside compression, and all of the data points we have now show that rotation is starting up again. But the big picture changes things in a way that XRP has never been able to use to its advantage before. In the past, altcoin rises happened after Bitcoin had made its big move, slowed down, and been moving sideways. They were able to grow because of this. But during that altcoin window in previous cycles, there were no institutional imports. The capital came from stores. Now that institutional money is in the same window, altcoins that have ETFs, clear regulations, banking compatibility, and settlement usefulness aren't just riding on old momentum. They are getting regular money from people around the world who have never dealt with crypto before. This is even more important when you look at how sovereign wealth funds use models for moving money around. Levels of risk govern how these funds work. Cash and bonds make up the first level. Blue chip stocks and gold make up the second tier. Venture and developing assets make up the third tier. Because ETFs wrap crypto, it is now placed between tiers 2 and 3 for the first time. That means that insurance companies, pension plans, retirement plans, and foreign financial institutions can all send money to XRP. These groups aren't just throwing money at any coins. They decide where to put their money based on how stable the regulations are and how reliable the settlements are. This is where XRP has the best image in the whole market. Let's move on to the adoption layer in the real world. This is where the story of usefulness stops being theoretical. The way money is sent across borders is going through one of the biggest technological changes since SWIFT was formed. Banks are fixing up the tracks. The messaging methods used by payment providers are being changed. Tokenization layers are being added by liquidity providers so that assets can move across countries in seconds instead of days. Most people don't understand how quickly the need for instant liquidity routing is growing. XRP is one of the few assets that was designed from the start to meet that need. The crypto market is focused on price candles and charts, but institutional money is looking at how ready the infrastructure is, how fast settlements happen, how much cash there is, and how well compliance is met. In all of these areas, XRP is right in the middle of the flow of global settlement improvements. It is important to know the difference between fundamental demand and speculative demand. Speculative demand goes up and down. It's raw, fast, and connected to stories. It's not the same for structural demand. It keeps happening. It's likely to happen. It has to do with real use that helps banks, payment companies, and liquidity sources. And fundamental demand is what goes up when global markets get smaller and then bigger again. That's what makes the current state of XRP so different from past rounds. Everything is being built around institutional liquidity pipelines instead of market momentum waves for the first time. Add something that not many people talk about to that. Central bank methods for allocating reserves. Most of the time, when central banks rebalance assets, they do so based on liquidity, stability, interoperability, and the speed at which payments are settled. In the past, crypto has never met these needs, but tokenized payment rails do. And while central banks aren't announcing big XRP deals in public, the systems they're building, for example, ISO compatibility, real-time settlement pilots, and tokenization tests, all fit with the kind of infrastructure that XRP already does very well. But that doesn't mean that central banks pick one stock at random. It means they use tools that need assets that can provide cash, process payments, and settle transactions right away. When that happens, XRP is part of the system, even if politicians don't talk about it. This is not advice about money. At the same time, private banks are getting ready for something even bigger behind the scenes. Optimization of intraday availability. This is one of the most important business tasks in the world. Every year, banks spend a lot of money to keep liquidity buffers for settlement slots full. If they can cut those down through fast digital settlement, they'll have a lot more money to spend. That's exactly what XRP lets you do. And as these tools go live, retail traders don't want them. It comes from banks improving their balance sheets that are worth billions of dollars. Even a small amount of that activity using XRP rails makes supply and demand bigger in a way that the public market can't see yet. Now bring everything back to the present. The market is very tight. Liquidity is getting better. Volatility is getting lower. Institutions are getting ready. ETFs are being used at a rate that has never been seen before for any other product. And the big picture is making it so that things that are settled and have clear rules get more attention. Everything is going in the right direction. This is the reason why XRP's next move doesn't look like a normal altcoin rise. There seems to be a structural shift in the situation of global liquidity. Now we'll talk about the key part, because most people fall behind at this point in the cycle because they don't understand how institutional time works. People keep an eye on price candles. Institutions look out the windows. Cash flow windows, regulation windows, settlement windows, and macro windows are all things that they care about. Flows speed up when those windows line up. The moves are exponential when flows speed up in an asset with low supply. All four of those windows are closing at the same time in XRP, which is one of the few digital assets that does that. The first part is the regulatory time. XRP is moving into a time when clarity isn't the main story. It gives you a base. That's what makes it possible for ETF issuers to move fast. It's what lets banks try out different settlement routes. It's what lets institutions go public without thinking about unclear laws. Even though regulations were unclear for a number of years, both Bitcoin and Ethereum were still able to grow. As XRP moves into its growth phase, everything is already clear. That changes things. It means that money doesn't have to wait for permission. It just needs to wait for the right time. The second one is the window for cash. When the macro situation goes from getting tighter to getting stable, liquidity windows open. That change takes time. It comes out in layers. Expectations about rates change. The market becomes less volatile. Bond rates stay the same. Currency markets get back to normal. When these layers line up, growing assets get liquidity back. However, unlike in earlier cycles, cash won't have to go through risky altcoins first. It will come in through exchange-traded funds, ETFs, and then it will flow straight into assets that have already been used for settlement. XRP has never been like other altcoins in terms of how easy it is to buy and sell. It's now moving into a framework where that difference is more important than ever. The third one is the build window. Building up infrastructure is the quiet booster. Stories used to be at the center of market trends. They now move around rails, rails for tokenization, rails for custody, settlement trains, ETF rails. Behind the scenes, every big bank is working on ways to integrate digital assets. They are not doing it for fun or to speculate on the stock market. Settlement methods are out of date, and blockchain-based liquidity networks cut down on costs, time, and friction. XRP has been tried out, piloted, and built into more early settlement systems than any other big asset. That puts it right in the middle of the infrastructure window. The fourth one is the time for capital rotation. This is the important one. The world's capital is always changing. It goes from stocks to bonds, then to commodities, then to real estate, and now through controlled pipelines, it is going from commodities to digital assets for the first time. It adds up to a huge amount when national wealth funds put even a small amount of their reserves into digital settlement assets. These funds are in charge of trillions of dollars. Tens of trillions more are managed by pension plans. On top of that, insurance companies, endowments, and financial managers handle even more. The whole structure of the market changes if even a small amount of that flow goes into digital asset ETFs. And as soon as that flow starts, the assets that have the best payment fit speed up the most. So this is why supply patterns are important. The amount of XRP in circulation has always been unclear. A lot of people are interested in the total supply number, but they don't know how the market float actually works. People think that XRP's liquid float, or the amount that changes every day, is much bigger than it really is. There is even less liquid float when ETF producers start to pile up for settlement products. Rising demand and low float are two of the most powerful forces in the financial markets. It's the reason why stocks under buyback pressure move so quickly. That's why the prices of goods with limited quantity go through the roof when demand goes up. Crypto hasn't really seen true supply compression and institutional investment together very often. It looks like XRP will be one of the first assets where this scenario fully plays out. Besides that, the liquidity layer is getting tighter while the usefulness layer is getting bigger. banks are trying real-time settlement corridors in a number of different areas. Payment service companies are looking into tokenized liquidity routing. Companies that send money across borders are upgrading their rails to make them faster and free up cash. These improvements aren't just ideas. Plans have been made, money has been set aside, tests have been done, and they are being timed to coincide with when ETF flows start to increase. For XRP, this is the first time that both speculation demand and structural demand could hit the market at the same time. The psychological window is another thing to think about. When companies back up an asset, the way people think about it in the market changes a lot. Retail responds to feelings. Institutions act in a planned way. When big investors get into an asset through regulated channels, regular people quickly follow, creating a layered inflow. First there was regulated money, then algorithmic trading money, then the retail momentum wave, and finally stories about global acceptance. Each wave builds on the last one. They pile up, and the strength of the breakout is increased when they do so in a price structure that is already tight. This is the reason why big market growth doesn't happen slowly. They happen quickly after a lot of pressure has built up for a long time. Now put everything together. The market is experiencing clear regulations, stable liquidity, infrastructure growth, institutional adoption, ETF inflows, supply compression, settlement integration, cross-border upgrades, and macro alignment all at the same time. This is the reason why the next move doesn't look like a normal altcoin run. Altcoin rallies are based on a lot of hype. Events with a lot of capital rotation are built on structure, and XRP is right in the middle of the new structure that is being built. No other time have we seen XRP start a cycle with ready settlement infrastructure, open institutional rails, clear regulations, aligned ETF issuers, rotating global liquidity, and macro conditions creating a launch window. Every factor that used to slow down XRP is now either gone or has been turned around, and every factor that speeds up movement is getting stronger. In all of its history, this is the most coordinated alignment that XRP has ever had. That's why the data keeps showing that things are speeding up. That's the reason why institutional analysts are starting to talk about it. This is the reason why the ETF schedule is so full. This is the reason why the market structure feels like it's on a spring that has been packed down. You can feel the shift if you pay close attention. Capital is moving in a new way. Stories are changing. The infrastructure is linking. XRP is now in the exact role it was designed to play. It is no longer a follower, but a leader. It's not about catching up in this cycle. It's about taking on the role that the system gives it.